everyone, a very good evening to everyone. I hope you all are fine and doing well. Hello everyone. And also I am hoping that I'm audible, my screen is visible and everything is okay from my side. So this is our second class where we are doing case studies and numericals in the BFM from basic to advanced level. So let's see some more questions related to the LRS, related to the documentary letter of credit, some case studies basically, because these two chapters are completely based on the case studies, and the case studies from these chapters are very important in our examination, for our examination. So let's see, and I hope that everything is okay from my side, and any problem you face, just do the comment. Any issues you are facing or any doubt you having, so you can do comment and ask there. So let's start with the first question. So the question is here Mrs. Anjali, question is saying, just first understand the meaning of question, what actually the question wants to say. That is very important thing. First just understand the question. So here the question is saying Mrs. Anjali makes the following foreign remittances under the LRS. We know that there is a specific limit under the LRS. So Anjali makes some foreign remittances under the LRS during the financial year 2024 to 2025. On 5th of April 2024, she remits 4 lakh to her son for general living expenses abroad. Okay. On first we are just understanding the background of Mrs. Anjali. What actually Mrs. Anjali done? So here next, Mrs. Anjali on August 10, 2024, she remits 5 lakh to her daughter higher education abroad, funded through an education loan from a scheduled bank. Okay. Second foreign remittances is this. Third one is there on December 15th of 2024. She remits 3 lakh to her own NRO account under the LRS for personal use, and then she has provided her PAN. Okay. Now what is the question saying? Question is saying, first one, the question demanding just calculate the total TCS, tax collected at source. First thing, just calculate the TCS. Okay. And show the calculation for each remittance. Here show the calculation for each remittance. So let's do the question. First part, let's address the first part here. Basically here we have to prepare the total remittance first. Total remittance, and the date is given on 5th of April 2024. She remits 4 lakh to her son for the general living expenses abroad. So total remittance here of 4 lakh, right? Then on 10th of August 2024, she remits 5 lakh for her daughter, means education purpose, or here I can say that education loan of 5 lakh. Okay. On December 2024, for NRO account, that the amount is here about 3 lakh. So if I do the total here, 12 lakh total she remitted. Okay, total 12 lakh is the total remittance. So TCS threshold means there is a threshold for TCS, that is 7 lakh per financial year. We know that TCS threshold is 7 lakh per financial year, and TCS is collected only on the total amount which exceeds the threshold, right? Means we have to deduct 7 lakh from this 12 lakh, and the remaining amount is eligible for the TCS, right? But here one thing is there, that is the general remittance to the NRO account, in which 5% is applicable, right? 5% is applicable here because pen is provided. If pen is not provided, pen card is not provided, in that case this become 10%, this percent become 10%, right? Then education loan is only TCS is deducted on education loan, that is 0.5%, right? 0.5%, because also pen is provided, that thing is clearly mentioned here that she provided her pen card. Okay, we know that now. Two things we understand here in the case of TCS, how to calculate the TCS total remittance. We know that in except education purpose 0.5% is there, right? Now here we have to calculate the access and split the remittance one, that is of 4 lakh. 4 lakh is less than 7 lakh, so no TCS in that case. No TCS is here because in the first condition 4 lakh is less than 7 lakh, so we can't deduct here any TCS, sorry. Remittance 2 is 5 lakh, but here now the question is that ki 5 lakh is also less than 7 lakh, so here is the same situation, no TCS. No, in the case of 5 lakh, if we see, she already made the remittance of 4 lakh, and for 5 lakh she funded for a education loan, she funded her daughter an education loan, right? And previous one is 4 lakh, so this become total amount here become 9 lakh, right? We have to deduct 7 lakh from here because that is accepted, that amount is exempted, so we have to deduct 7 lakh from here. What amount we got here? 2 lakh. Now in this 2 lakh we have to apply this 0.5%, which is equals to 1000, right? 1000. Okay, so this is the TCS here. Now in the case of third one, remittance 3, which is here the case of the NRO account. NRO account, so here is the previous total if we say, that is complete total is 12 lakh. Now TCS 5% is applicable, 3 lakh is there. On the 3 lakh we have to apply 5%, that is equals to 15,000. Why? Because we already calculated the TCS on this amount, this total amount. So now we have to calculate the 5% on 3 lakh. On 3 lakh 5% is there, 15,000. Now the case is there, why we deducted tax? 3 lakh is already less than 7 lakh. No, in one financial year, if once the 7 lakh limit is exceeded, then in every remittance we have to deduct the tax. So that's why on 3 lakh 5% is applied. So here we can say 1000 plus 15,000, that is equals to the 16,000. This is the total tax collected at source. So Mrs. Anjali, total TCS payable for the financial year 2024 to 25 is rupees 16,000. Clear? I hope that this thing is clear, and I also showed the calculation here. Okay. And now the next question here. Mr. X, an Indian citizen who went abroad in January 2016 for employment purpose and acquired the NRI status under the FEMA. He is now now temporarily visiting India. During his stay, he has received handle certain funds in the India. Okay. He wants to know, he wants to know here whether these transactions are permissible, and if so, so which type of account the amount should be credited or deposited. And here are some details of the transactions given. The details of the transactions are given here, right? uh, different types of transaction details are given. Let's discuss one by one. Okay, so okay, uh, first one is sales proceeds of inherited property. What happens in that case? Where is the sales in proceeds of inherited property? Is that permissible? Obviously it is permissible. It is permissible. Why it is permissible? Under the FEMA Act, any NRI PIO is allowed to sell inherited property and credit the proceeds to the NRO account. So this activity is permitted. Sales proceeds of an inherited asset must be credited only to NRO, as the repatriation of such type of assets is allowed up to the US dollar 1 million per financial year. If we required the submission of some required documents like inheritance proof, tax paid, everything, which account? NRO account. Got it? Which account? NRO account. Okay. Rent from the tenants, what we do in that condition? In the rent from the tenants, so rental income from property in India is a legitimate source of income for an NRI. It is a legal income. It must be credited to the NRO account, since this is the income earned in the India. Which account? NRO account. Maturity of FDs that opened before becoming the NRI. Whatever the maturities are there of the fixed deposits that is opened before becoming the NRI. So in that case, yes, but some care needed here. Which type of care? Why I said that? Because FDs, if opened in 2015 when Mr. X was resident, that can be continued till maturity. Obviously FDs can be continued till maturity. Upon the maturity, the funds must be transferred to the NRO account, or the deposits can be renewed under the NRO status. Okay, so here it is permissible but needs some type of care. And another thing is, he may convert them to NRE FDs if the bank agrees and source qualifies here. So they can convert these FDs also. Correct? Next, they are asking about the PF settled here. PF dues settled for erstwhile employer. See, this thing is permissible. Because why permissible? PF withdrawals are allowed and can be credited to the NRO account of an NRE. This is treated as income secured in India. So NRO account is the account here. Now the loan repayment of loan basically in the cash. This is not fully allowed. Under the income tax and FEMA, cash transactions above 20,000 for loan repayment is not allowed. So loan must be here repaid through the banking channels, banking channels, we can say check, draft, electronic transfer. So cash payment of rupees 1,50,000 is not permissible and also attract the penalty. So, what will be the correct mode for this one? Should be repaid through bank transfers or preferably from an NRO account. So, that is not fully allowed. Clear? This thing is clear. I hope that this is clear to you. What I told you. Right? Okay. Now, the next question. Okay. Mr. X, who is again a Indian citizen, and Mr. X, who is an Indian citizen, who went abroad for employment in January 2020. Why? When he go for the employment in the January 2020, that means he become NRI, and according to the FEMA, because we know that there are two definitions of the NRI according to the FEMA as well as according to the Income Tax Act. He is visiting India for 2 weeks and seeks guidance for his bank how to handle his existing banks and the investment arrangements. His assets and accounts are as follows. So here we have to we have to understand what will be the things here. Okay. So for this, first is, as the uh, concerned banker, if I give the advice to the Mr. X on what actions the bank must take each of the following accounts, assets in the compliance according to the rules and regulations of FEMA and the RBI guidelines for the NRIs. So there is the first one is resident SB account rule. See, once a resident becomes an NRI, he cannot maintain a resident SB account. It must be redesignated to an NRO. This is mandatory. SB redesignated to the NRO account. This thing is mandatory. Right? So, what will be the action here? Just redesignate the resident SB account to the NRO SB account. Next is resident joint account. Okay. Joint account with the wife as the second holder. Okay. In that case, what will be the action here? Just a second. Just a minute. Okay. Okay. So now we are talking about the resident joint account. See, these joint accounts can continue only if the NRI is the primary holder and the resident spouse is the second holder. So the account must be NRO, operated on former or survivor basis. So what will be the action here? Resident redesignate the joint account as an NRO joint account. with Mr. X as the former and the spouse as survivor. Okay, housing loan that is availed in 2017. In the case of housing loan which is availed as a resident, which is applied or taken as a resident, continues unchanged, but the bank should note the change in the residency status. Rental income related to the mortgage property must be credited to the NRO account. So mark housing loan as a basically housing loan and NRO in the bank account, bank records. So here we can say that this thing is not changed, and but bank have to change the records, change their own records basically. So direct rent that is of 25,000 to be credited to the NRO account only. Okay, so that 2 points are clear here. Now the recurring deposit. In the case of recurring deposit, existing deposits, whatever the deposits are, FD, RD, these are opened when the residence can be continued till the maturity. But upon maturity, these proceeds must go to the NRO account or can be renewed under the NRO status. So what will be the action here? Redesignate the RD as RD NRO, recurring deposit as a RD NRO. Future RD payments that must come from the NRO account or through the inward remittance. Now what will happen in the case of demat account? Demat account. What will happen in the case of demat account? Resident demat accounts. These accounts cannot be operated by an NRI. They must be closed or converted to the NRO demat account or a new portfolio investment scheme account that must be opened as NRI investment. So bank should here note the new status as the NRI and guide the client to transfer shares to an NRO demat account. Future buying or selling here must comply all the rules of the NRI PIS rules, like PIS is portfolio investment scheme rules. Clear this thing? Okay. Next, Mr. A, that is an Indian citizen, then went abroad in 2010 and becomes an NRI. He returned to India permanently on 2nd of December 2021. Why? Just to take care of his aged parents. Obviously, that is the basic thing, important thing. As of 31st 2021, he holds some following things. So we have to tell here what is the correct approach here in the following accounts and in the following investments. So let's start with one by one. So I think the questions are there. Just a second. Okay. Let me check. Okay. What happened in the case of non-resident ordinary SB account? That is, the amount is 12 lakh here. See, Mr. A is now resident, right? Now the resident in the India. So the existing NRO account must be changed to the resident saving account. Simple. Because the NRO accounts are just for the NRIs, where they can hold the income, whatever the income they are earned in the India. Once the status change to the resident, an NRO must become resident SP, right? So action is same, convert the NRO account in the resident SB account. Next is non-resident external NRE account, and the amount is 72 lakhs. In that case, NRE account must be closed or redesignated here once the account holder become resident. So here Mr. A has the option just to convert their RFC account useful if he wish to maintain funds in freely repatriable foreign currency. Once transferred funds to a resident SB account, means he can transfer the funds also the resident SB account, that is also allowed. So basically this RFSC is an excellent option for a returning NRI just to keep their foreign earnings in foreign currency for the flexibility. So just convert in this case NRE SB account, RFC account or resident SB account. Okay. Third is here non-resident external NRE FD account. Amount is same, 72 lakhs. NRE FD that may be allowed to run till the maturity, but some agreed terms are there. Some terms are there which must be agreed. So on the maturity, what will happen with the proceeds? The proceeds must be redesignated. How? Here I can say that how this thing happen. Basically, into an RFSC account, if Mr. A wants to suppose holds the amount in the foreign currency or credit it to the resident SB account. So NRE FD, these can continue till the maturity, but they have to follow some rules with the resident status on the maturity. So it basically, here we can say it is allowed to run till the maturity. On maturity, convert this RFSC account or resident SB account. Now FCNRB deposit US dollar 1,50,000. Now what to do in that condition? If I talk about the FCNRB deposits, these can also continue till the maturity. Why? Because on the maturity, the returning NRI account converts the proceeds to the RFSC account or also can transfer the proceeds to the resident SB account in rupees. RFSC accounts are designed for returning NRI who wants to keep their deposits in the foreign currency. So it can continue till the maturity. On maturity, they can transfer to the RFSC account or the resident SB account. Right? Now the next is resident joint SB account with wife, that is resident, that she is a resident. So in that case, the account is already resident SB account. The account in that case already a resident SB account, right? Okay, so in that case, it is already a resident SB account, or it may continue as it is with the wife as the first holder. If Mr. A wants, he may change the mode of holding to make himself the first holder. No redesignation needed in that case because account is already a resident account. What happened in the case of investments in the mutual funds, and the amount is here 36 lakhs. So here uh, proceeds from the redemption that is due on 31st of March 2022, that can be credited to the resident SB account, or that can be credited to the RFSC account. If the in that case the funds qualify as foreign exchange under the FAME. After the return, the source becomes residents. So the redemption proceeds can freely flow in the resident SB or RFSC if repatriation needs existence. So here we can say credit redemption proceeds to the resident SB or RFSC account is the correct action here. Got it? Okay, let's move to the next question. I hope now it is clear to you that actually what happened with the things with the different account. Okay, let's see this question for today. ABC account imports. Let's understand first the things. Here the ABC account that basically imports the machinery from the XYZ company which is in the Germany, right? Okay, there is a ABC Limited which imports the machinery from the XYZ company which is in the Germany. To pay for this, ABC Limited request its bank, Global Bank, to issue an irrevocable letter of credit. Irrevocable letter of credit are those letter of credit which can't be altered, which can't be cancelled without the consent of the all parties which are included in the LC. That is, they request their bank to issue the LC under the UCP DC 600 in the favor of XYZ company. The LC is duly issued. XYZ company ships the goods and presents the required documents to its negotiating bank in the Germany, which checks the document and forward them to the Global Bank in India for the payment under the LC. When the documents reach the Global Bank, ABC Limited approaches a local court seeking an injunction against Global Bank payment to XYZ company, claiming that the goods supplied do not match the pro forma invoice and the machinery quality is very inferior and does not match the underlying purchase contract. So document presented by XYZ company are strictly compliant with the terms of the LC. Now what happened in that case? XYZ company is saying that we prepared the document with the strict rules, but Global Bank is saying no, the goods are not good, the goods are not according to the LC. So what happened in that type of conflicts? See, question is there, under the UCP 600 article 4 and 5, is Global Bank bound to make payment if the documents comply with the LC, even there is an issue with the goods? Let's see the answer of this question first. What happened in that type of case if the goods are not good? See, keep this thing in your mind. Yes, under the article 4 of UCP DC 600 clearly says that LC is separate from the underlying sale contract, and article 5 is saying banks only deal in those documents, not on the goods or the services. They don't know about the goods and the services, right? So banks are bound to make the payment here. They don't say that there is a issue with the good, so I am not able to make the payment. That is not allowed. So if the documents are strict in the compliance, then here banks must pay. The buyer complaint about the goods cannot be used to dishonor the compliant documents under the LC. So that thing is not allowed. Can ABC Limited claim about the goods quality be used by Global Bank to refuse payment to the negotiating bank? Is this possible? No. Under the UCPDC, basically a breach of the underlying contract does not affect the issuing bank obligation to honor the LC if documents are okay, documents are good. That in that case they are not saying that documents are okay and goods are not okay, so we are not doing payment. No, this thing is not allowed, right? So in that case, this the answer is no. What should Global Bank do if there is a court injunction? What will the Global Bank do? In that case, while UCPDC 600 governs the LCs, court of law have overriding authority. Means if a court issues a stay, that is injunction, the issuing bank have to follow and cannot make the payment until this stay is lifted, until the court orders. This put the bank in difficult position, which basically in that case the bank stuck between the UCP DC rules and the local laws. Now explain the risk for the banks and the applicants in such type of cases, and what type of precautions should the issuing bank take to prevent the misuse of the LC mechanism. Risk are there. See, the issuing bank risk default by the applicant if the injunctions delays the payment, obviously, and the negotiating bank or confirming bank may not get paid on the time, which creating the reputational or the legal issues, which creating the legal issues or the reputation. So what are the precautions? Basically here proper education should be there. Buyer should understand that disputes over the goods must be settled directly with the seller without involving the bank. And here checks the applicant credibility. The issuing bank takes the credit risk on the applicant. The applicant must have the funds to honor the reimbursement. So here bank should not collude with the buyer to delay the payment due to contract disputes. Here are the things to learn. LCs are independent. Bank only deals in documents. Court orders overriding the UCPDC because local laws always prevails. Good drafting, proper compliance and clear communication with the customs prevents the misuse of LCs. So why this UCPDC article 4 and 5 exist? Because just is there how banks will protect themselves. Clear? So these are some case studies. I hope that these case studies helps you in learning the things behind the chapters, like the giving you the practical knowledge of the international banking. So I hope that the things are clear to you. If any problem is there, just do the comment and ask your issue. And if you like these session, so kindly subscribe to this channel and give like to this video. So it is very motivating for me to bring these types of sessions in the future. So thank you so much. Let's meet in our next class for more interesting case studies and the numericals by module wise we are going. So thank you. Let's meet in our next class. Till then, take care everyone and have a good day all. Thank you.